September and October of 2008 was the worst financial crisis in global history. Hi, Assalamualaikum everyone, and welcome to Crash Course Econs. For this week's topic, I'm going to talk about the 2008 financial crisis. In the early 2000s, investors would tend to go for low-risk, high-return investment. So in order to get that, they would invest their money into the US housing market's mortgage. The investors would get the profit from the interest rate that the homeowners paid through mortgages. But in this situation, investors didn't buy an individual mortgage. They invested on an investment called mortgage-backed securities. Financial institutions would buy lots of mortgages, pile them up together, and they would sell shares on the portion of the mortgage. For example, Investor X invested on a 1 million worth of shares. But this 1 million worth of shares doesn't belong to only one mortgage. It can be the portion of mortgage from homeowners A, homeowners B, C, and so on. During that time, people would say that this investment is considered safe and they can get a lot of profit from it. Because as day goes by, house prices will increase. And at the very least, when the mortgage gone default, the investors could sell back these houses at a higher price. And the other reason is that the borrowers are from a low credit risk group. So the possibility that they can pay is higher than gone default. Due to the high demand and advantages of this type of investment, it is considered as AAA ratings investment, and investors are eager to buy more shares of it. To meet their demand, financial institutions build more houses and create more mortgages for people to invest. So in order to sell all of these houses, lenders would lower the requirements and they targeted the low-income group. So this type of investment is called subprime mortgages. But why would investors would still wanted to invest in this type of mortgage, although they know that high number of them cannot pay? Because this subprime mortgage is new and there is no historical data of it. So people would refer back to the mortgage-backed security as their reference to this new subprime mortgage. So investors believe on the ratings and they keep on invest. Let's go to the dark side of it. As years went by, house prices keep on increasing and borrowers are unable to pay for it. So they default these mortgages. During that time, there are lots of defaulted houses at a high price. So investors couldn't find anyone that are able to pay. They are forced to sell these houses at the US housing market. But unfortunately, there is no more demand of it. To go against the surplus, the investors and lenders need to face a huge loss because home prices started to collapse. They need to resell these houses at a lower price. Because of this issue, people stop buying and investing on subprime mortgages, and lenders need to bear lots of bad debts. 2007, big lenders declared bankruptcy, and investors had a huge loss on their investment to this mortgage. Insurance company who offered insurance against these default mortgages called credit default swaps suffers because things go beyond control. 2008 stock market crash. Credit markets and trading companies froze and US economy faced a really bad recession. And it also affects the global economy. It is a year of financial crisis. During this crisis, lots of individuals and companies suffer. To counter this recession, in 2009, the government introduced a stimulus package worth almost $800 billion injected to the economy. A reminder to all, don't be too greedy. A business that is based on manipulation will not sustain. Thank you.